Good afternoon. I'm Bob Hoff, President of Mountain State Financial Group, and here's your weekly update. Rates rose this week by an average of 0.195% APR, led higher by the 30-year FHA and VA products. International pressures have had a push-pull effect on mortgage pricing this week. The International Monetary Fund stated that the ongoing efforts to curb inflation, along with recent financial institution concerns and the ongoing war in Ukraine, have placed severe strain on the global economy, particularly for emerging markets with high amounts of debt. Remember, news or projections of worsening economic conditions are positive for mortgage-backed securities and mortgage rates. On the flip side, the United Kingdom released its year-over-year consumer inflationary data, which was hotter than anticipated and nearly double that of current U.S. inflation. It's not just the Fed fighting inflation. Nations around the globe are attempting to balance, bringing inflation lower while keeping their economies from falling into recessions. The United Nations Conference on Trade Development warned that if nations continue to tighten monetary policies, there's potential for a financial crisis similar to what we've seen in 2008. Domestically, the banking sector concern remains in the rearview mirror for now, with JP Morgan Chase, Wells Fargo, and Citigroup all reporting better than expected earnings. Although bank failures and loss of confidence in the financial sector can lead to deposit runs and market instability, the failure of Silicon Valley Bank mere weeks ago brought mortgage relief. With renewed confidence in banks, however, the rate relief we experienced has now gone away. The Fed remains hawkish and committed to fighting inflation despite the potential recessionary risks, although some Fed governors are more hawkish than others. Fed Governor Waller believes that not much progress has been made to bring inflation back down to 2% and that monetary policy needs to be tightened further, while Fed Governor Bostic believes that one more rate hike in May could be the last we see for some time. We continue to anticipate another 25 basis point rate hike in early May. Although most recent domestic inflationary data implies that inflation is improving, the domestic economy and labor markets remain very strong. This strength will likely embolden the Fed to stick with its higher for longer stance on interest rates. Lock where you can in the near term, and as always, if you have any specific questions or scenarios you'd like to discuss, our team is happy to help.